Hello everyone, welcome to the Stock Trading Tutor channel. Recently, the post budget 2019 was announced. Now let's look at how the budget has affected the banking and financial sector. Before we go into the topic, I'd like to tell you about the stock market awareness program which we are conducting in Patna and Delhi on 20th July. So in order to register for this free training session, you just have to fill in the forms and the link for them has been given in the description below. So just fill out the form and go attend these training sessions and reap the benefits as you can clear all of your doubts from market experts. Now let's go into the news. In the Union Budget presented on July 5th, the government took measures to resolve liquidity issues of both banks and NBFCs, which had been reeling under bad loan pressure by way of capital infusion of 70,000 crore rupees into PSU banks. It would open funding avenues for financially sound NBFCs and provide partial credit guarantee for public sector banks for the purchase of pooled assets of financially sound NBFCs. The government's move to vest the Reserve Bank of India with additional power over NBFCs and housing finance companies will streamline the regulations and implementations. This is expected to provide more uniform regulatory environment to the lending segments. Steps have been taken through tax measures to bring deposits taking NBFCs and systematically important non-deposit taking NBFCs at par with banks and other public financial institutions. Measures to support the financially sound NBFCs and higher regulatory RBI monitoring will lead to drive for consolidation of NBFCs. The government has proposed several measures to boost debt markets. To enhance the sources for infrastructure financing, it has proposed to set up a credit guarantee enhancement corporation and have an action plan for deepening the corporate bond repos, credit default swaps, and so on. In the tri-party repo market in corporate debt securities, an arrangement to allow AA rated bonds as collaterals was envisaged. It was proposed to allow investments made by FIIs, FPIs in debt securities issued by infrastructure debt fund non-bank financing companies to be transferred or sold to any domestic investor within the specified lock-in period. These measures should significantly ease liquidity and provide much needed impetus to infrastructure and real estate. Simplified KFC norms for FPI and move to streamline NRI investment are also steps in the right direction. For the insurance sector, there were announcements with respect to increase in FDI from 49% to 100% for insurance intermediaries and reduction of the net owned fund requirement for reinsurers to join the IFSC from 50 billion Indian rupees to 10 billion rupees. This will further encourage more insurance companies to set up operations in India. 100% FDI in insurance intermediaries will help in building distribution scale and penetration of insurance. This may also result in strong alternate distribution channel in addition to bank assurance. True to its commitment to further promote the IFSC, several tax incentives have been announced, such as enhanced holiday scheme with added flexibility, exemption for interest paid on external borrowings, relaxation on certain distribution taxes, and expansion in scope of securities. A social stock exchange enabling easy funding for social enterprises will give a push to several welfare schemes of the government, providing much needed impetus to inclusive economic growth. Overall, the budget has responded comprehensively to the sector's requirements by way of adequate fund allocation, better understanding of regulatory shortcomings, and streamlining foreign investments into the economy. Now, let's look at the top stocks which investors can look at for buying post the budget 2019. So, three companies from different businesses which fit the bill of reforms or policies favoring the doubling of farmers' income, developing infrastructure, railways and roads, healthcare, education, defense, DBT, uptrending paychecks of the government employees, to name a few. So, according to Dharmesh Kant, the head of retail research in India Nivesh Securities, some of the investment ideas are Canara Bank, Bajaj Electricals, and FIAM Industries. So here are the sources for the specific news item. If you'd like to watch videos on stock market and trading, please subscribe to this channel. If you'd like some free training on stock market program and trading, you can attend these programs which is free training session which we are conducting in Patna and Delhi. So you can register for these programs by clicking the link in the description and filling out your details.